What signs should investors be reading right now about the markets, even if those signs are far down the road? Let's get right to our floor show traders, John Corpina and Scott Bauer. John, you're on the floor of the New York Stock Exchange. I know, let's not make a mountain out of a molehill. This is not a significant sell-off by any stretch. But if you believe these earnings outlooks, is the milk in the fridge just about to turn sour?
Yeah, Liz, if we take this market rally out of the equation and we go back 3 weeks, we're still talking about the same headwinds in the markets then and we're talking about the same ones now. And those same headwinds are going to be here for the foreseeable future. Interest rates, geopolitical issues, we've got 2024 elections coming up. All these headwinds that we've seen are going to put more pressure on this market. I think in a very short period of time, and albeit we'd like to see the market move higher, it moved too far, too fast, in too strong of a move. We're going to have to pull back here. I don't think we're going to have a significant pullback, but I think everyone's going to take a stop, take a deep breath, and realize that we shouldn't probably be where we're at. Economic data is showing us that things aren't as rosy as we think they are. As we continue to see the headlines on geopolitical issues, as those continue to mount, those are certain things that I think are going to put pressure on top of our markets. Right now, we're in this kind of fingers crossed hope strategy that the Fed is not going to raise rates anymore. We're going to stay where we are and then at some point start to lower them. I think the Fed is put in a position that they're going to have to go that route, but as they remain data dependent and as they remain watching the headlines of geopolitical issues, there might be a pivot that occurs there. So we're in a good area, but it's not very certain.
There were 8 Fed heads jammering away today. Scott, none of them said anything too significant, in my opinion. But again, they're all very cautious and saying we can't ease up too quickly. But that said, you're looking at yields slightly down today, especially for the 10-year. But that's interesting because the markets are also down. So what is it? What are the signposts you're reading so far down that maybe you can't see them without binocs?
Yeah, and John just mentioned it, economic data, right? The data that we have gotten ever since a couple weeks ago, since Powell talked, has been good for the market in the sense that it's showing weakening. CPI was down, inflation's down, all that stuff is really good. Even the jobs number this morning at that 230,000 number, right? That was higher than expected.
Meaning jobless claims.
The jobless claims.
Weekly jobless claims.
Yes. So that's all good for the market, but what about down the road? What we're really starting to see is not just the economy slowing down, but the economy slowing down to an extent where the consumer is getting in trouble. And maybe that's what you're seeing out of a lot of these retailers, because they're looking at all this consumer debt that has built up, Liz, and it is at record levels.
Yeah, and how about this? The U.S. Postal Service says, John, that it's going to hire a third of the seasonal workers that it had added last year. But I'm confused because Amazon is going to hire 250,000 holiday workers, and you're getting mixed messages here.
Yeah, Amazon's in its own category. I think they swing for the fences, and sometimes they're right, sometimes they're wrong. I think when looking at holiday season coming up and consumers, the credit card debt levels are at all-time highs, or highs that we've seen at peaks of recent. We see that pricing has increased little by little, and it gets to the point where it impacts the consumer. Consumers are not going to be able to afford the same gift this year, which was at a lower price last year. There's going to be a lot of picking and choosing as to where that's going to spend money. We keep hearing about that in the retailer outlook moving forward. Where are the consumers going to spend their money? They're going to be forced into making decisions, and I think we're going to see that impact. It's going to be very interesting to see fourth quarter earnings reports when we get them in the end of the first quarter of next year of what the holiday season is going to really look like.
Okay, so what does well in either scenario here? Scott, a couple of weeks ago, you said you like J.P. Morgan and Goldman Sachs. They had some pretty pronounced upside moves since then, so what do you do?
Right, so I have definitely lightened up on those. I tend to stick for best in class. With Walmart getting absolutely destroyed today, that has piqued my interest. Even at these levels here, even with their outlook, that has piqued my interest. I'm going to start picking there a little bit. And on the same page as Walmart, Liz, I'm looking at a Costco. Costco is down, in concert, in sympathy with Walmart today. But again, if you look at best in class, especially in the retail sector, those are two names that have to stand out. Moving forward, I think it's a really good time here to start picking back at maybe some of the gold stocks, because if we have topped out, if rates have topped out, if the economy is slowing, we could see gold itself get back to that, challenging not just 2,000 but 2,100 level.
Okay, stop the presses. Scott Bauer says start looking at gold again. But John, what about technology? I find it so interesting. The leader on the Nasdaq 100 is it's a tech name. Yep, IDXX. That is IDEX Labs. But Microsoft is the second in position. Google is right up there. AMD doing well. And yet the laggards are Cisco, that makes sense, Palo Alto Networks, Tesla's in there. We're going to talk a lot about why Tesla's down nearly 5% right now. Big breaking news on that. But as we consider looking at all of these names, there's some chip names in the laggards and chip names in the winners.
Yeah, I mean, think of the items that you talked about this week alone of technology stocks hitting 52-week highs, right? Once we have those out there and you look at you look at Apple where that's trading, Microsoft at those levels there, you are going to get some interest there of profit taking coming off the table there. We're going to start to see some pressure in that area there. The chips have been hit hard. We continue to talk about China-U.S. relations when it comes to tariffs. You have to find those outliers that are kind of lagging behind. Utilities have been lagging behind in this overall run-up that we've seen. Some good high dividend-paying stocks in there. So try to find those ones that kind of aren't really playing catch-up with everybody else.
Well, and laggards from day to day. Scott really looks at Walmart and says it's 11% cheaper. Great to have you both. John, Scott, if I don't see you, have a wonderful Thanksgiving.
Thank you, Liz. Be well.
So much.